about probably are outside California.
Most of the properties that we deal with are east of the Mississippi, and they are definitely out of California because we can get higher rents in those areas than we can here for the price. So for example, we buy a house in Atlanta for $5,000 and we can sell or finance that at $500 a month and make our cash flow work. So the question is, how do you manage that? But you don't have to worry about managing it because you're not putting it in as a rental. You are selling it to the person. So the person moving in is going to be responsible for fixing the toilet and putting in the hot water heater and the heater. So there's very little management. The main management you have to do is a collection call.
Okay. So is that usually handled on the telephone?
Telephone, absolutely. You have to pick up the telephone. Most of the people we work with don't have the internet or email or faxes at their home or printers. Here in Silicon Valley, it's a given. Everybody has a computer and a printer at their house, but it's not that way. So you're going to use phones. They all have cell phones. Usually it's prepaid minutes, and so you have to time your calling. But you call them, you remind them, and you know what? They make the payment because it's cheaper than rent, and they're owning the home, and they're blessed to own the home.
So another thing related to this, I'm sorry, is that again, your expectation is that you're going to get these sold really in a pretty short period of time. Isn't that the case?
You absolutely want it sold as soon as possible because if you don't sell it, it's going to get more vandalized. And so the goal is we hang a sign up, we have ground crews, and we usually get it sold within 2 weeks to 6 weeks because we don't want the inventory sitting there empty.
Okay, so you can actually get them sold pretty fast.
Yes.
And it's basically some communication within the neighborhood itself?
These neighborhoods, when people drive by the sign, they see it and they call and they want to know what's going on. And you don't really sell to people outside the neighborhood because most people are afraid of some of the neighborhoods, but the people who live there aren't afraid to live there. And so if you were to sell a home in the inner city of Atlanta to somebody who lived in San Mateo, they probably would not be comfortable to go look at that. But somebody who lives there, that's their home, mom lives across the street, and they're fine buying. So that's who you're capturing, is your drive-by audience.
Okay. Now, as I understand it, a lot of times these REO packages are actually located in the properties maybe in several different states that are in one package, which seems to me could create some headaches for somebody. So how do you help people with that?
Okay, so yes. This is called a blind package because you're buying blind. You don't know what the houses look like. You don't know where they're at. And our first package that we purchased, we were in 15 different states. And what we found is even though we had people to look after the homes, it was a little bit on the difficult side. And so we went and we started negotiating with the people that were selling, and we've been able to negotiate a term called cherry picking, which allows us to pick a geographical area off from a list and not have to buy in multiple areas. So you can choose a concentration. And that's much more helpful. It's easier to put your management team together on the ground.
Okay. Now, a lot of people get started in real estate, it seems like these days, or they'd like to get started in real estate, and they look at their bank account and they say, how am I going to even get started? But some of these people may have a large retirement account, like an IRA or a Roth account. So how can they work with that?
You know, Michael, so many people don't know that they can invest with their 401k, their IRA, their Roth IRA. There are companies that they can set up what's called self-directed IRAs. So they would transfer their money there, and they can invest that in real estate. They can use that to start a business. And so that money is not tied up in the normal mutual funds or stock market, which isn't performing right now. They can take more active control of that money and put it into play in things that are once-in-a-lifetime opportunity like this.
Yeah. So there are alternatives. You can get these self-directed accounts. You have to pay more fees related to them. Obviously, it's not something you're going to just get at your regular bank or brokerage.
No.
But nonetheless, to have this flexibility, and again, we don't think that somebody should put all of their money into this.
No.
Because this is actually, it can be kind of high risk.
This is high risk. We definitely need to let people know this is high risk, and the last thing you want to do is put all of your retirement money into this particular business model, but you could put part of it. And so you have part of your IRA sitting with a self-directed, and part of it can sit with somebody else that's normal or traditional type investing.
Mm-hmm. Well, we actually have quite a bit of time left.
Okay.
So we're going to be flexible here, and I'm going to ask for some more of your wisdom related to this, like who might be interested in getting involved in this area? What would be a profile maybe of an investor that you tend to deal with?
Sure. Most of the investors that I see coming into this business have had real estate experience in buying properties. They've maybe done some development. Most often they've done rehab, where they purchase a property, they've rehabbed it and either sold it or turned it into a rental. And so they have experience with the properties. They're also an entrepreneurial type where they don't mind hiring and managing employees. And they're looking at it as a business, not just a sideline to build their retirement, but to build it as a business.
Right. So that's important. So if you're just used to operating as an employee and not having to, this is not something that's problem-free. This is something that you're probably going to have headaches, and it's going to require attention, and so it can be kind of time-consuming.
It can be, because you're going to have the phone calls that come in. Once the sign gets hung, you're going to need to answer the phone calls live, because that'll give you the best response for sales. And then once you make the sale, these are people that aren't typically responsible enough to remember to make their payments. They'll make it, but you have to call them and remind them. So you'll need somebody to help you with collections and managing the contracts that come in. This is not simply buy the property and you're going to get the mailbox money. This is, you need to manage the process, and then you will get the mailbox money.
Yeah. So from listening to some people, you and I are both involved in this San Jose Real Estate Investors Association, listening to some of the people that have been more active in investing over the years and so forth, it seems like a lot of them have sort of moved to this area because it's sort of like I've always had to bust my rear end doing the rehabs and the other things to go and find these other opportunities where this bulk REO thing is sort of falling into your lap. It seems a lot easier to do it, and so, you know, so why fight it? You know, focus in this area because it's where the opportunity is right now.
Yeah, it's like the analogy that the faucet's running. Do you want to go outside and dig a hole to see if there's water in the ground, or do you want to stick your cup under the faucet? Right now, the homes are coming out. They're coming out cheaply priced. There's exits. There's people who want these homes. And so you just kind of move into it. And that's the thing about a real estate business, is you need to be able to go where the trend is, because some of the processes work in different markets. I mean, we haven't seen anything like this in any history where we have more REOs coming out the way they are right now.
Yeah, a flood, I guess.
Yes.
But again, it's the flood. It feels like, although I know that there's a lot of repossessed properties in California, particularly in the middle of the state and so forth, but it still feels like it's heavier in the other parts of the country, like a Detroit or parts of Ohio and so forth. I've heard of some in the South.
Southeast, yeah.
Yeah.
So the thing that's helping California is that it's California. And so the REOs that do make it on the market are still being bid up because foreign money is coming into the state. The jobs in the Midwest and in the Southeast, they're losing jobs just like California, but the foreign money isn't coming in there to support the economy.
Okay. What sorts of, you were mentioning some of the liabilities, and maybe we should talk about that, some of the things that you need to do for your research and your due diligence. Now, I guess a lot of it, you can't really do that much before you buy the property, is that right? Or
We have a whole process that we go through before we buy the property. Of course, we search all the online value engines to see what kind of value we see out there. And then there's a service that we research to see what the back taxes might be. But nothing beats picking up the phone and calling. So you'll call somebody that's, like whatever the county is, you'll call the compliance office to find out if there's any violations, code violations, building lawns that aren't mowed, you know, garbage dumped off because the neighborhood decides that that's a good